top 5 crypto coins is about to get collapsed. The crypto winter of 2022 that started with the event of Luna crypto network crash that wiped out about $60 billion according to Forbes.com has immensely affected several other crypto projects one after the other, with Binance losing over $3 million as part of the amount originally invested in Luna, and other cryptocurrency companies like 3AC, Celsius, Voyager that filed for bankruptcy. Thinking that was the end, recently one of the world's largest centralized exchange, FTX, crashed due to liquidity crisis, and from a report, several crypto project venture capitalists, investors that are associated with FTX is likely to crash also because the company has an outstanding debt of about $8 billion. In this report, you are going to discover the top 5 crypto coins that are about to be collapsed. 1. Sol. Solana is a Layer 1 blockchain protocol well known as the Ethereum killer, and it makes use of a proof of history (POH) consensus system developed by Anatoly Yakovenko. The major selling point for Solana against Ethereum, the immediate competitor, is its scalability of the protocol, which in turn boosts usability, low transaction cost, while still guaranteeing fast and processing about 65,000 transactions per second. Solana has received much praise for its speed and performance, and has even tipped as a rival that can compare to Ethereum and challenge the dominant smart contract platform. However, the network has been plagued by repeat outages that have impaired its price and aspirations to be the Visa of crypto. Furthermore, its ecosystem is accused of favoring venture capital investors with unfair tokenomics. Solana was launched on the 16th of March 2020, and since then, Solana has reached an all-time high of $260 in November 6, 2021, before crashing to $12 due to the bear market effect and other factors that may even lead to the full collapse of Solana. On the 3rd of August 2022, it was announced that the Solana ecosystem had been targeted by hackers, affecting 9,231 Solana wallets. 4 Solana wallet addresses took approximately $4.1 million in total from victims. In addition, the recently collapsed crypto exchange FTX is a major investor and influencer of the Solana protocol since the inception in 2020. According to reports from Forbes.com, they have been helping Solana gain traction and public trust, and they hold a position of 10% of the entire Solana market. So as they have crashed, Solana is likely to crash with them due to their large holding. 2. CVX. CVX is the native token of Convex Finance, which was developed by an anonymous team. However, Convex Finance is considered one of the most important and influential protocols in decentralized finance, and thus a fairly low-risk investment. Convex Finance acts as a cartel that pools the assets of individual stakers and benefits from their aggregated liquidity. Even low-level investors can stake their Curve Finance LPs with Convex and receive boosted rewards that would otherwise not be attainable. CVX was launched on the 21st of May 2021. And since then, CVX reached an all-time high of $62 in January 2022, before crashing to $3 due to the bear market effect, and other factors that may even lead to the full collapse of CVX. The CVX community is chaotic due to locked amount of CVX suddenly went into circulation following the smart contract exploits, crashing the price of CVX about 20%. 3. CRO. Cronos is an Ethereum-compatible blockchain, mainly focused on providing utility to the users of Crypto.com, a centralized exchange and trading platform. CRO was launched in June 2016, and since then CRO has reached an all-time high of 10 cents in December 17, 2020, before crashing to 7 cents due to the bear market effect, and other factors that may even lead to the full collapse of CRO. Overall, CRO acts as an instrument that powers Crypto.com's drive to increase the adoption of cryptocurrencies on a global scale. As such, the company is continuously working on finding and developing new use cases that will allow users to leverage the cryptocurrency to enhance the control they have over their money, data, and identities. The crash of FTX, one of the world's largest centralized exchanges, poses a threat to all other centralized exchanges, and Crypto.com was not exempted. They experienced a 3% drop in funding rate, and this implies that short traders pay long traders to keep their position open, showing traders are extremely bearish of the token. However, the FUD around CRO is based on fears of contagion amid the FTX fiasco. At the core of these worries is potential insolvency, with analysts pointing out that Crypto.com is holding low liquid cryptocurrencies like Shiba Inu and its own token CRO as reserves, which reportedly make up 40% of the exchange's total assets. In an attempt to solidify the news, they had to do a public proof of reserve fund, of which they did. After moving $210 million worth of stablecoin from Binance and Circle, and Binance CEO confirmed the move, but also alerted the crypto ecosystem to stay away from Crypto.com due to this act, as he described it as a clear sign of problem for an exchange to move a large amount of crypto before demonstrating their proof of reserve. 4. FTT. FTT is the native token of one of the world's biggest cryptocurrency exchange, FTX Exchange, founded by Sam Bankman-Fried, who is also a leader at Alameda Research, a quantitative cryptocurrency trading firm that provides liquidity in cryptocurrency and digital assets markets. FTT was launched in May 2019, and since then, FTT has reached an all-time high of $85 on September 9, 2021, before crashing to $1.50 due to the bear market effect, and the collapse of FTX Exchange due to liquidity crunch, as described by the founder of Sam Bankman-Fried, causing the company's valuation plunge from $32 billion to bankruptcy in a matter of days, dragging down founder and CEO Sam Bankman-Fried's $16 billion net worth to near zero. FTX filed for bankruptcy on November 11, 2022, after a surge of customer withdrawals earlier in the month. CEO Sam Bankman-Fried admitted that the company did not have sufficient assets in reserve to meet customer demand. But what really happened to FTX? The FTX debacle started when CoinDesk revealed on November 2nd that Alameda Research, a quant trading firm run by Bankman-Fried, held a position worth $5 billion in FTT, the native token of FTX. Named after the company's founder, FTX's collapse took place over 10 days in November 2022. The catalyst for this crisis was a November 2nd scoop by CoinDesk that revealed that Alameda Research, the quant trading firm also run by Bankman-Fried, held a position worth $5 billion in FTT, the native token of FTX. That prompted concern across the cryptocurrency industry regarding Bankman-Fried's company's undisclosed leverage and solvency. Suddenly, Binance says it will sell FTT tokens. Binance CEO Zhi Zhao decided to sell all its FTT positions because of risk management. The company estimated that it held approximately 23 million FTT tokens, worth about $529 million. To manage our risk, Binance will sell all of the FTX tokens that we are holding on behalf of our customers. This will allow us to move from a long-term investment into pure speculation and make sure that we have enough funds to cover any potential commitments during the next year, he wrote in a blog post. Binance CEO Changpeng CZ Zhao said the decision to liquidate the exchange's FTT position was based on risk management, following the collapse of Terra Luna crypto token earlier in 2022. By the next day, FTX was experiencing a liquidity crisis. Bankman-Fried attempted to reassure FTX investors that its assets were stable, but customers demanded withdrawals worth $6 billion in the days immediately following the CoinDesk report. Bankman-Fried searched for additional money from venture capitalists before turning to Binance. The value of FTT fell by 80% in 2 days. In the following hours, FTX experienced a possible hack in which hundreds of millions of tokens were stolen, estimated to be about $600 million. FTX officials appeared to confirm rumors of a hack on Telegram, instructing users to delete FTX apps and avoid its website. 5. Gala. Gala is a play-to-earn crypto project that it was founded by Eric Scheinmeyer, who is also co-founder in Zynga, a popular social and mobile game. Gala is not a game, but a game guild, which means it houses several blockchain games. Gala was launched in the year 2019, and it has grown to 1.3 million monthly active users, and 26,000 NFTs have been sold, with the most expensive piece valued at $3 million. Gala Games aims to take the gaming industry in a different direction by giving players back control over their games. Gala Games' mission is to make blockchain games you'll actually want to play. It plans to reintroduce creative thinking into games by giving players control of the games and in-game assets with the help of blockchain technology. Players can now own non-fungible tokens, NFTs, and influence the governance of games within the Gala Games ecosystem. The Founders Node's voting mechanism allows players to influence what games Gala should develop and what games should get funding, besides buying NFTs for specific games. Gala Games also utilizes Gala, its own utility token. Gala has reached an all-time high of 80 cents in November 2021, before crashing to 2 cents due to the bear market effect and other factors that may even lead to the full collapse of Gala. Currently speaking, there are a lot of FUD in the Gala community, as many fears the project is going to collapse, following the recent hack incident that occurred on November 3rd, where a suspended hacker minted $2 billion worth of Gala on BNB Smart Chain and dumped a portion of the tokens on PancakeSwap, earning a total of 12,977 BNB, which was worth around $4.5 million at the time. This drained a PancakeSwap pool and caused a crash in the token price. According to a report from crypto analytics account called Look On Chain, some crypto traders took advantage of the situation, buying Gala from PancakeSwap and dumping the tokens on Huobi, causing a price crash from 4 cents to $0.0003 on the crypto exchange. Conclusion: watch out for these 5 crypto coins mentioned here, as investing in them currently is to be considered high risk based on the fundamentals and FUD around the project. If they don't crash during the entire crypto winter, then they may likely survive in the bull run. But then, do your due diligence and invest what you can afford to lose. This may not be a dip for a discount buy, but gradually a crash, we can't tell. A crash